I have my friend Vicente Orellana with me right now with Ultramodern Development Group. I know that's a mouthful, but I got to tell you something. I can't wait to do this interview with you. So welcome.
Thank you very much.
Yep, you're very welcome. All right. So I want to get right down to business. We got some folks listening to this. We are also, you're going to be able to go to my Facebook page later on and see this. If you couldn't catch it live, I will also have a link when it's finished to my YouTube page. So you can always go to Bruce Woodburn, the Loan Arranger YouTube, and you will find it there as well. So we wanted to talk about new construction as an alternative to buying either a resale home or buying a production home, right? Mm-hmm. So there's a significant difference. So first of all, you've got a company called Ultramodern Development Group.
That's
right?
Correct. Yep.
And how long have you been in business?
We've been in business for a couple of years now.
Okay.
The individuals that I hire, I've been in the business for over 40 years.
Okay.
So like our general contractors that we hire have been in the business for over 40 years. They're ranked in the top 8% out of all GC licenses in the state of Florida.
Okay.
So I only work with the best.
Very good. Awesome. So now when it comes to building a custom home or a semi-custom home, does the individual already have to own the land?
No, absolutely not. That's the beautiness behind what we provide to the public, is you do not need to own the land whatsoever.
Okay. So let's just say I've got a client. They don't want to build with a production builder. They don't want the HOA, right? Because we know HOAs can be there for some people. They're not for others.
Absolutely.
Okay. So there's nothing against them, but some people just don't want that. So they may want to buy, but they don't have the cash to go pay what, $40,000, $50,000 for a lot.
No. That's the reason why, again, we've partnered with an amazing company such as yourselves. Because of that reason, you don't need to have the cash at all to purchase that vacant lot
and still build a custom or semi-custom.
Still build a semi-custom or production homes that we have already in stock.
So you've got, and we'll get to that in a minute. So you've got plans that people can choose from. So, okay, yes, let's just kind of go through this a little bit here so we understand, and people that are listening out there understand that they don't have to already own the lot. That you can provide the lot for them.
Absolutely.
But if they do own the lot, that's okay too.
Even better.
And if they own the lot and they have equity in the lot, that's down payment just like cash.
Absolutely.
Right now. All right. So let's get into this. So I got a few things I just want to cover in this, in the presentation. So let's just see if we can navigate through this PowerPoint and figure out how we're going to make this work here. So first of all, now, why choose a construction perm? Okay. Here's why I think we should choose a construction perm as an alternative, because there's a shortage of inventory.
That is correct.
All right. We went from a 3-week supply of inventory in the market to a 6-week supply. Now, the news is that, oh my God, there's a giant influx of properties and properties are dropping in value. Not true. We are actually up, according to Aura right now, 16.7% in values, but there is still a shortage of inventory. So this gives the client an alternative. So let's just see here. Now, home prices are continuing to rise. We said that they've gone up 16% already year to date. Now, I expect that that's probably going to level off a little bit. But the production builders are struggling to keep up with inventory. As a matter of fact, NAR, the National Association of Real Estate Agents, is stating that it would take the production builder 10 years to keep up with today's demand.
Wow.
That there's no way that that's going to happen. So let's just see here. All right. Now, here's another reason to choose construction perm. Not everybody wants that tract built home, right? So imagine your dream home and building it the way that you want it. Okay. And then you can choose the lot that you want, right?
Absolutely.
Or you'll supply lots. So you've got lots right now that you and your company already own.
That is correct. So we have lots in areas as in Spring Hill,
Okay.
as north of Spring Hill, Apopka, as west as or east as let's say Melbourne
Okay.
and Palm Bay,
Okay.
going further south to Lehigh Acres, Sebring, Northport, Port Charlotte, Ruskin, all of
You've
Polk
got
County,
lots
all over the place.
So, and obviously, depending on where they are, would depend on approximately what somebody could expect to pay for a lot, correct?
Correct.
Yeah, just give me a range of where they would run.
I'll give you something very simple. Right now, I'm picking up lots in Ruskin right now for $15,000.
Okay. Now,
And that's a true quarter.
and Ruskin
acre.
is over near like Lakeland, right?
That's
So not
correct.
too far away,
Nope, you're about
right?
40 minutes from Tampa International,
right?
and an hour from Orlando.
Okay. All right. So that puts you in a pretty good space there. So now I want to talk because we have some real estate agents listening to us right now. And whenever you're a real estate agent, you want to know that if you bring a buyer in, that you're going to be compensated for that transaction, because they know that if they brought a client to a production builder, that production builder is going to compensate them. So I put together a basic scenario on how a real estate agent would be compensated. So let's just say they find the lot. It's not one of your lots. They find a lot. And the lot, let's just say, is 80 grand. And I know you told me, you're like, dude, I'm picking up lots for 15,
Exactly.
25, 50,000. But let's just say it's an $80,000 lot. They would get paid when they represent the buyer on that lot, approximately a 3% commission, which would net them about $2,400.
That's correct.
Okay. All right. Not a home run, but they're getting compensated on the lot. Then they bring you a buyer. Okay. They put a buyer in your lap. You show them your homes. You lay out your options for plans, specs, how they can change the elevation, maybe even move some rooms around. And let's just say you're at a construction cost of about $350,000. Okay. Is that
right.
doable?
Yes, sir.
It is doable. Okay. And even if they're only at a 2.5% commission, that's another $8,750. So they're stand to make an $11,000 commission by bringing you a buyer, right?
Yep.
And finding a lot for them.
That sounds absolutely
now, will
correct.
you build on their own lot?
Absolutely, I would.
Okay, so you'll build on their own lot, or you'll provide a lot.
And sometimes a good thing, Bruce, when a customer has a lot, and they've already done their due diligence on it, it just expedited the time much faster. So now it takes me building a home. My average time right now post permit is about 171 days.
Okay.
That drops it down at least a good 6 weeks.
Okay. All right. That's incredible.
It's even faster now.
Okay. So you're building custom, semi-custom homes as faster than a lot of these production builders are building them.
To God be the glory. Yes, sir.
That's fantastic stuff. Okay. So now we've made it possible for the client to have an alternative into a construction transaction. So I just want to walk them through, so the real estate agents listening to this, or people that are considering building a custom or semi-custom home, have got an idea as to what the process looks like. So you could go find a lot, or you might have your lot already. We're going to get you pre-approved for your financing, so you know what your buying power is. Then you're going to meet with Vicente and his team, and he's got a great team. Matter of fact, we have some people in the studio with us right now. Genesis is here with us, joining us, and she's one of his amazing salespeople. So you'll have an opportunity to meet with her, and she knows the product inside and out.
Absolutely.
Right? So she'll walk them through the process. She'll match up my pre-approval to what the client's looking for in terms of square footage and lot selection. And then we're going to walk from there. We're going to start signing the contract.
Absolutely.
So you're going to come up and say, here's the model. Give me a model name over here. What else?
Sophia.
The Sophia. Okay. You chose the Sophia. We signed the contract, and you want to move the master bedroom wall over 6 inches. We want to expand the back porch and put a roof on it, or an overhang, whatever it is, you can do that. We sign the contract. We have all the terms. Okay. Then you're going to complete the design of the home. Okay. All right. And then we go to
close.
we go to
Yeah.
closing.
We're closing this.
See, this is what people don't understand. They're like, wait a minute, how can I close? You haven't even started. You haven't even moved dirt yet,
Yes.
right? How can you go to
This-
closing on that?
And it's amazing because this will become the new way.
It will. It's the alternative.
This is the alternative, and it's a great alternative for those individuals who, a perfect example, I'm helping a client out right now who owns he's an owner operator for tractor trailers.
Right.
So found a couple of pieces of lots over in Indian Lake Estates.
Okay.
Amazing. 1 acre. We got him 1 acre next to his lot. Okay, 30,000 for the half acre. We're putting a $340,000 house on it.
Beautiful.
Okay, so we're at 370. We bought 2 acres side by side next to him
Okay.
at 30-30. So we're at 60. Okay, so now he can park his tractor trailers without having the
And
headaches.
you know what? We have a lot of
HOAs
people out
and
there.
all that stuff.
You know, Vicente, that is our client too. Because you look at when you need that, let's say I have a landscaper, right? A truck driver.
Exactly.
Somebody that's got some vehicles. Maybe you have a motorhome. Maybe you got one of these beautiful new motorhomes.
Mhm.
Maybe you want to park your Boston Whaler in the side yard. You know, when you buy production homes, they have strict HO.
Limited.
Listen, you can't even push a wheelbarrow between you and your neighbor's house without scraping your knuckles anymore.
Exactly.
And by God, you can't park a jet ski in the side yard. You definitely aren't even going to fit a small, even a 19-foot boat
At
you
all.
can't fit it. And you wouldn't be allowed to put it there anyway. And God forbid you pull up with your company truck that's got the name all over it. You can't do
Can't
that.
do that neither.
So now this solves a lot of problems for the
Absolutely.
self-employed person. So now people want to know, how the heck do we get to closing before the ground's broken? So that's why you came to me, because I've got a construction perm program that is a one-time close.
Yes, sir.
Right. So that means we close up front. That means once it's closed, the contract's been written. I'm going to make sure the appraisal is based off the plans and specs and the lot selection that they have. Right.
That's correct.
Then we go to closing, and then you start building their dream home. Right.
That is correct.
And so then the next step, I can get my screen on here, is you finish building the house and you start enjoying your dream home.
One
So-
of the things that, if I may interject, they get a weekly progress report
Right.
once we're moving forward.
So they're getting that from you.
Mhm.
That lets them know what stage they're at, when they're due for maybe a draw request.
Mhm.
Okay. And then from me, they get a Tuesday update report that keeps them up to date on where their financing is. But if we're starting to build, the financing's done. And this is what I want to talk about right now, because a lot of lenders don't have one-time close.
Absolutely.
They have two-time close, which means if you close and you start building the home and something happened to you, maybe you lost a job, maybe one of you lost a job, but you needed both to qualify. Whatever happened, if you don't meet the same requirements, you built a house that you can't buy.
Exactly.
On a one-time close, even if you lost your job after the loan is closed, even though ground hasn't been broken, the deal's done.
The deal's done.
It's a done deal. You're well protected. And
that's the beautiness and security that anybody that has worked their backside off for that down payment, for the monies to become that homeowner, will appreciate, because we don't know what the future holds.
no, we don't.
We know that we worked hard to get to this level so that you guys can be able to secure that. It's the reason why I came to
And
you
even
guys.
if rates go up, which they likely will, you're protected. The
Mhm.
loan's closed. You have
Exactly.
no way. And let's just say, and we'll talk about this in a minute, we can talk a little bit more, but let's just say that rates are up by the time the house is finished. It doesn't matter.
Doesn't matter.
It was locked. But let's say rates are down. Okay. And they've already got a rate locked in. I just refinance them out of it,
Mhm.
because by the time you're done, that house is going to be worth more when you're finished than it was when you started.
Exactly. We have all equity in it.
Yeah. So there's no issue with that. And so what we talked about is we'll lock your rate in advance. So there's nothing that can happen. Now, you can choose to have no payments during construction. So no payments during construction, and it's mandatory on an FHA and VA transaction, but it's optional on a conventional loan if you're putting 20% down. If you don't want me to add the payments into it, I won't add the payments. You can make payments. But a lot of folks say, you know what? I'm renting something right now. I don't want to pay payments on the new construction at the same time that I'm paying
the
rent
rent,
on my
yeah.
house. So you have an option of doing that, and I give you that option, right? So that's something that's relatively unique to our system and what we offer. So there's no requalifying down the road when the house modifies, when the completion. We talked a little bit about that. But a one-time close also reduces the client's closing costs because there's not two closings.
Exactly.
Right? So it makes it a lot better. We'll offer 15 and 30-year mortgage. We're typically seeing 30-year fixed rate mortgages on this. Okay. We're not doing adjustable rates. There's no balloon notes. There's no fancy stuff. It's meat and potatoes, baby. Just like you and I.
No carbs.
We are meat and potato. We are all carbs. We are carbs and protein. Okay. All right. Like if you want to come into the studio and see the two of us, we are not tiny people. Okay.
Not at all.
We're not tiny people. And my wife, by the way, said I can't have lunch with Vicente anymore. And
no more eating with Vince the Builder.
I'm like, good gosh. I said, I can't keep up with this guy, man. All right, let's get back to business. Easy requirements. Most lenders and banks want 20% down. Some will do 10% down on conventional loans, and they want excellent credit. But when you come to me at CrossCountry Mortgage, I've got conventional loans, and I put a grid up here on the screen that I can do as little as 5% down on a construction perm loan, conventional loan. I don't know. I don't know if there's many banks, if any, that I know
there
of
is none,
that are doing a 5% down conventional construction perm loan. And you can get up as high as a 45% debt to income ratio. Now, you want to put more down, you can put more down. If your credit score is a little lower, I'm going to require you to put a little bit more down. But I'll go as low as a 700 credit score on a construction perm loan. Most mortgage companies will not do that. They want 720 or above across the board, and some want as much as 760. So we can help you with that. Let's get back on our screen here. Now, there's a little tag note here because I hear this from time to time that if the land's got a trailer on it, I bought an acre of land and it's got a trailer on it, and I got to remove this and destroy it. Can we add that into the transaction? Can you build it into the cost?
You can.
You
Yes.
can absolutely do that. So now and here's the thing. If there's a tear down or structure that has to be torn down, you can add it to the cost, and the builder can add it into the contract. Now, you still have to appraise, right?
Always.
So we can't just be adding all kinds of frivolous things that aren't necessary, but you can do it, and we can accommodate you with that. So the cost of the structure removal can also be included as long as it appraises. Now, the borrower, we said, can make interest only payments, or I can add the payments into the transaction during this process. Pretty darn easy. Let's talk about the requirements for an FHA loan. Not a lot of lenders that even offer CPs, like banks, will offer an FHA construction to perm loan. And if they do, they generally want more down.
That's correct.
You love my FHA product.
I love it.
Because it gives so much more flexibility. So we have buyers that may not be able to swing it for a conventional loan, so they want an FHA loan. And your price point, and as a matter of fact, you got some prices in front of you. Just give our audience a clue as to what we're looking at aside from a lot. So you pick your lot. Give me some ideas of some homes here.
So a Sophia,
okay,
which is our 4-bedroom, 2-bathroom.
Okay.
That is 2,100.
Does it have a garage or a carport?
Yep, 2-car garage.
Okay.
No carport, 2-car garage, 2 spaces. That is about 1,728 under air, 2,100 total. That one is going for 279.
Oh, you've got to be kidding me.
Yes, sir.
You can get a brand new home,
brand
4-bedroom, 2-bath,
279 without the lot.
Okay. All right.
We've got, let's say, the Victoria, which is our popular seller. That one right there is 339. Okay, without the lot. And that one is 2,800 square foot.
That's a big house.
Yeah. 4 bedrooms, 2.5 bathrooms, 2,100 under air. And I love that one because on the side where the kitchen, the entertainment is at, on that side, you've got 21 foot all the way
Oh, beautiful.
from tip to top.
That's beautiful.
Yeah.
Beautiful. What else you got?
We've got a 3-bedroom, 2-bathroom, the Audrey. Okay,
Okay.
that one's 1388 under air, 1710 total. We've got that one now at 265,900.
Okay.
And the Ayan, we've got that one as little as 309. Okay, and that's 2,100 square foot,
big house.
3-bedroom, 2.5 bathrooms.
Mhm. So listen, what I'm gathering here is even if you paid 40,000 for a lot,
Mhm.
50,000 for a lot, we're under $400,000
Easily.
for a brand new home, right? And are these like dinky tiny lots or are these decent lots?
These are decent lots. I'll tell you this much.
Do you have your width?
Yeah, so you're looking at depending on where we buy,
Of
right?
course.
An example, over in Indian Lake Estates, you get nothing less than a half acre.
Oh, that's a big lot then.
Nothing less than half acre for 15 to 30,000.
Because the lots that we buy in these production homes are they're I mean, we're talking 50, maybe a 65-foot lot, right?
Yeah, exactly. No,
That's
no,
and they put ginormous homes on tiny lots.
not with
right?
us.
All right, that's fantastic. So we got FHA loans and you can have a score as little as 640 and put as little as 3.5% down.
That's amazing.
Absolutely incredible, isn't it?
Absolutely.
Now, here's the coup de grace, because this is what I love. I love helping veterans. I love helping my active duty military. We are passionate about that. And it was unfortunate, but I found that for the last 3 years that sellers got greedy. Okay. And we're not accepting FHA and VA transactions.
Oh, that's sad.
It's sad. It's sad, isn't it?
Yeah.
It's sad. So I believe in really representing and honoring our veterans and making sure that we always go the extra mile to make sure that they get the very best.
I'll add a little something there for us, and again, son, if you're watching this right now from Korea, thank you for your service.
Thank you for your service. Absolutely. We appreciate you.
One of the things that really broke my heart, because I'm all about VA and FHA, I'm all about that, is that we got to a position where there were so many individuals, I won't say who, companies, persons, that weren't taking FHA or VAs.
No, they weren't.
And it hurt my heart.
But there were realtors advising the sellers not to take them.
Exactly.
Now, there is a time where and here's the only caveat I give on that. If you are buying a home and it has extreme deferred maintenance, bad roof, bad plumbing, bad electrical, wood rot, okay, then that's not a VA.
No, not at all. Where I'm heading with this is that there's no price haggling with me. I'm not raising the prices at all.
Right.
The price is what it is.
So in other words, if your prices of material go up in the middle of construction, you don't have an escalation clause?
We have an escalation cost that covers up to 10%.
Okay.
And it can cover more if we need to.
Now, could the client add into their transaction enough to cover that 10% in the event that it happens?
They can.
All right. We're going to talk a little bit about that. So we've got VA loans, 100% financing with as little as a 640 score and a 50% back end debt ratio. Dude, I mean, that's killing it.
Yeah, exactly.
That is killing it. All right. So all you realtors or people out there that are considering building a home, you have all the options. I just gave you conventional, FHA, and VA options. All right, 30-year and 15-year fixed included. FHA, no payments during construction. Soft costs, which are costs that are include the interest during construction over a 9-month period of time, and any related fees can all be included in the builder's contract. Okay, the builder adds it in, but the builder pays it. So ultimately, whatever we're adding in, the client's going to pay for it. You have 2 separate contracts with the builder. If you own the land right now, your company, then you're going to do 1 contract for the land and 1 contract for the construction of the house, correct?
If they own the land, they own the land.
No, if they own the land, but if you own the land,
or if I own the land,
then
yes.
they have a contract for the lot and they have a contract for the construction.
Correct.
Okay.
Or if their realtor found them a lot, then that's also
then it would be the same.
Yep.
You would have a contract with the seller of the lot, and then you would have a contract with you, the builder. Okay. VA, I just put this in because I think it's important. Builder's risk insurance is the insurance that you're required to have during construction, because
That's correct.
let's just say you got a house and it sticks, but you got a roof on it and a hurricane comes by and destroys it. It's got to be insured.
Absolutely.
So that's builder's risk insurance. And on a VA loan, you're going to add that into your cost, and then you pay that. On a FHA and conventional loan, the buyer can pay it. All right. So qualifying requirements. If you already own your home and you plan on living in it during construction, so you own a home and you're going to live in it during the construction, you must qualify with that existing home. If you're renting a home and you plan on renting that home during the construction phase, you have to qualify for the rent on that home and for the new construction. So I just want you to be aware of that. If you are out there, it is something that we deal with when we're getting you pre-approved so that we can guide you in the right direction. All right. So,
and one thing that I'll tell you is that, you know how when a lot of the rental communities, or even single family rental homes, have a 2 week, or not 2 week, 2 month or 6 month cancellation.
Yes.
Okay. I'll cover a cancellation fee if I need to.
It's great news, man.
Yeah.
That's amazing. That's amazing. So now we're doing eligible products for primary and secondary homes. I don't do investment properties. These loans are not designed for flippers, and they're not designed to be a spec home for a builder. Okay. That's a different product,
That's correct.
different day, a different class. Okay. No down payment assistance. Don't call me about Hometown Heroes and a construction perm loan. I do Hometown Heroes, but you can't mix it with a construction perm loan. CCM does not provide lot loans, so I don't do lot loans. It's one of the only type of loans, Vicente, that I don't do. So if you need to buy a lot and you need a lot loan, maybe we can connect you with somebody that can help you with that. Or if you can get seller financing and hold that seller off for, say, 90 days, then it gives you time to get the design done for the house, even shorter, right? 60 days. So seller does a contract with the buyer, and then I just pay the seller off at the closing table, right?
Correct.
That easy. So another thing that I think is important is I don't close your transaction till you've got all your permits done. Tell everybody why.
I mean, it just guarantees the work at the end of the day.
Shortens the time
and the time frame.
Yeah, because how long could you wait to get permits right now?
Depending on the county.
Right.
Yeah.
But it can be a delay, right? Because we're at the mercy of the county. So we don't want to close until we've got permits. All right. Now, I put together what I use to determine value, because it confuses realtors and it confuses people when we're using value. So let's use this scenario where you've come up and you've found your house right there, and I see one on your sheet right there for about $300,000. So let's just say the cost to build the home without the lot is $300,000 and the lot is $80,000, and you have no equity in the lot. We're buying it simultaneously. All right. And then we're going to put a $6,000 or a 2% contingency reserve. A contingency reserve is, oh my God, I didn't realize we had gopher turtles living on this, right? So now we got to remove the gopher turtles, or we need an extra $2,000 in fill dirt to bring it up to grade, whatever the case is. It's an oh shoot, we didn't realize that. And that is a safety feature. And just like we talked about for the contingency for the escalation, if things did go up 10%, and I'll bet you in the last few months, you have not had to exercise a contingency plan, right?
No.
For an escalation,
Not at all.
right? But if a buyer said, hey, instead of 2%, could I put 3 or 4% as a contingency in there just in case something happens? And maybe at the end of the day, I want to put a Sub-Zero refrigerator in it instead of a Westinghouse or whatever it is, they could do that, right? So we can add to the contingency. All right. So now this is a situation where we're doing an FHA, a VA loan, or a conventional loan where we're adding in all the payments during the construction phase on a 9-month build. So if you were building a $300,000 house with an $80,000 lot and a $6,000 contingency reserve and all the payments combined over the 9 months to build time is $20,520. This is an example, guys. All right. I would use a value of $406,520. If you did not want me to add your closing cost, or excuse me, your interest payments during construction, and you want to pay interest only on your own, I will use a value of 386. And there's your
number
construction perm.
Mhm.
There it is, plain and simple right there. Now let's talk about a draw schedule, because draws are really important to builders,
Absolutely.
right? They want to know that when they need a draw, you need a draw because you got to pay some subs, right?
Mhm,
Or
mhm.
you got to buy material. So you need to know that the draws are available. So is CrossCountry Mortgage flexible on your draws, and have they met with you to make sure that they are really accommodating you
Oh,
as a
absolutely.
contractor with
Hands
the draw
down.
schedule?
Hands down. Absolutely.
Okay. So the initial draw, and we call it an at closing draw, you're going to get 10% of the amount financed into the construction
That's
loan,
correct.
right? So now when we give that draw, does that 10% given to you at closing if you don't own the land yet, or does that land have to be recorded in the buyer's name first?
No, we either way.
Either way.
Either way, yes. So
All right.
we receive the 10% draw, whether it's recorded or not, because
Okay.
the next day. So again, the day of closing, CCM pays off. Let's say if there's a lot, someone
We're going to pay the lot
they
off.
pay the lot off, and then we get the 10%. The next day, that's when we start moving.
Start moving
Yep,
dirt.
That's
Start
when we start
moving dirt.
shaking and baking.
And then your second draw is typically going to be about what stage?
I would say about 5 weeks out.
And what stage is the house at typically?
At that point, we've already laid down the foundation.
Okay.
We've already got the plumbing up.
Okay.
Okay.
Sticking up through
yep,
the slab.
absolutely correct. So at that point,
So the footers are in, the
footers are in.
slabs on,
We've already called
the
for
fill dirt's already
Correct.
done. You're all ready to go. So
Correct.
you're at slab with rough plumbing.
Exactly.
Okay. Then the third draw is another 20%.
Exactly. Now
And-
that's framing, trusses, windows.
Okay. So that's dried in then.
Yeah.
Okay. So the third draw is dried
See,
in.
we already call it in advance.
Okay. You got the tricks down. You got it all down, don't
Yes,
you?
sir.
All right. He knows the lay of the land around here. Fourth draw, another 20%.
Correct.
Okay. Where are we now?
Well, right now, my God, I would say less than.
No, I mean, for the fourth draw, what stage of the property, what stage of the process would we be at
that
now?
point, we're looking at now design style. So now we're bringing in the cabinet, the floors, the basically
So
your
you're
FF&E.
finishing, you're really finishing up.
Your features, fixtures, and your finishes.
Okay. Final. It's really getting things wrapped up.
Mhm.
And then you got a fifth draw.
And that's now the end.
That's the end. And then you have a final draw,
Correct.
which is your 10%.
Correct.
Okay. So there's your 100% in draws.
And in
And that's a
between
10% holdback.
That's correct. And even there, okay, we've already done another walkthrough with the customer.
Okay. Why do they hold that back? I know the reason, but my audience might not. Why is there a 10% holdback?
That's a great question, actually.
Okay. I know the answer to that.
Yeah.
So we got to wait, make sure we got the certificate of
Oh,
occupancy.
yeah, I could see that's
Okay.
right.
Right. Because we have to order that. Right. And you can't move into the house until you have it.
Without it. Correct.
And then it makes sure that you, the customer, if you're listening to this or you're representing a buyer, that we want to make sure that the house was built according to what you were contracted for.
Correct.
So we want to make sure that everybody's happy before we release the final amount to the builder. So there's a copy. That is our draw schedule. So how do we get started? First of all, you want to meet with Ultramodern Group, and you can go to ultramoderngroup.com and they will walk you through the process. Genesis will meet with you. She'll talk to you about the process. We want to get you pre-approved for your financing as quickly as possible. Now, if you are a real estate agent right now and you are representing a seller to sell a piece of land, call Vincente. He may be interested in it and we may have buyers for it, but you could market that land. And here's one of my list reports marketing programs that you can use as a real estate agent. And this is what you'd be marketing. It's not very sexy.
Mm-mm.
It's just a piece of dirt. Okay.
That's
It's got a
good.
little grass in it.
Oh,
but
good
I
looking.
can't tell anything from that. How would you like to market that same lot that looks just like this?
That'd be very good.
Wouldn't that be very good? And you could use your
Absolutely yes.
renderings. And so what I suggest you do, Mr. and Mrs. Realtor out there, or Mr. and Mrs. Seller of a land, team up, and then we can put a sign in front of your yard that says, build one of these models, and it'll have a picture of one of these houses.
Absolutely.
And you can market this lot so it looks like this and say, build this house on this lot.
Absolutely.
Isn't that a better way to do it? All right. So if you'd like more information on that, you can always connect with me and I will help you walk through that process, understand how construction loans work. I teach classes across this, all over the state of Florida. You can go to my website at webringyouhome.com. If you're a real estate agent, connect with me. Okay. I've got everything you need. I've got the best mortgage company that I think in the land. And I say that not because of me, but because my wife runs the company and because my team are empowered to help you. And they know these programs inside and out. So why go anywhere else?
Absolutely.
Right? Why go anywhere else? So I've put on the screen how you can connect with Vicente and his team. You've got your phone number on the screen. Take a picture of it, save it, go to my YouTube page. This will be linked to the YouTube page. Go to my Facebook page. And I tell you, I want to thank Vicente for coming to me and sharing this, because I think a lot of people, Vicente, just don't understand that they have other options, right? Right. And I want to thank you for not only being a business partner of mine, for allowing me the opportunity to help your clients, but I'm really excited about the future of helping more people discover that there are more options
out there
for them.
Absolutely.
Yeah.
Thank
So
you as well.
you are very welcome. I appreciate you very much. All the information is attached to this webinar, Facebook Live page. Go to my YouTube page, go to my Facebook page. And if you need to connect directly to Vicente or anyone on his team, we really appreciate you doing that. And make sure that you tune into my radio shows on Saturdays and Sundays on WDBO. And make sure you please subscribe to my YouTube channel at Bruce Woodburn, the Loan Arranger YouTube. You guys have a great day and thanks for tuning in. I hope you got a lot out of this class and thank you again.
Thank you, Bruce. Appreciate you.
You're very welcome.